I'm Charlotte McLeod with the Investing News Network, and here today with me is Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com. Thank you so much for being here online with me once again.
Oh, thank you, Charlotte, for having me back. It's a pleasure.
Yeah, really excited to be talking to you as we come to the end of the year. It feels like we are always speaking either just before or just after a US Federal Reserve meeting. And this time it's before. We have that coming up next week. So to begin, I want to get your thoughts on that. What would you suggest that investors watch for? What impact on the market are you expecting there?
Yeah, so the big thing with the Fed is going to be, what do they say with the new variant, this Omicron variant? What do they say about tapering? So are they going to keep with the tapering that they set before? Are they going to be more aggressive even in light of the new variant? Or are they going to pull back a little bit and say, hey, we may go slower? I'm wagering that they'll probably stay the course, meaning that they'll stay the same in terms of the amount that they already announced they would taper. And they might leave the door open to increasing the taper, the quickness of the tapering going forward. So I think that's the big thing. That's going to affect the 10-year yield. And then that will ultimately affect metals, stocks, pretty much everything else out there.
Yeah, so for sure that will be important to watch for the tapering. And, they've said that after tapering wraps up, which if it goes on schedule, that should be midway through next year, we would then start to see interest rates beginning to be hiked again. What are your thoughts there? Is that timeline looking realistic to you?
Yeah, so it's going to be interesting, and it is a concern for the markets if they totally do all the tapering, because if they subtract the tapering, remember it's about 120 billion dollars a month that they've been pumping into the system. So if they remove all of that, that's 1.5 trillion dollars a year that gets sucked out of the markets, that the markets have been inflated with. So I am concerned about the overall stock market in 2022 if they do go through with that. And then in terms of in terms of raising rates, I'm always skeptical. I mean, the market seems to always throw a fit, to decline, unemployment start to bubble up. And then it seems like the Fed never fully gets out of the hole that they dug themselves in prior. So, I mean, maybe they can start tapering and even finish tapering, but I would be shocked if the market allows them to actually raise interest rates. Remember, the market is kind of like this child in many ways, where it throws tantrums. And the Fed has become the parent that gives into the child, right? It's the parent that spoils the child. And it always seems like that. We saw it with, 2018 when the market dropped 20% when the Fed started to raise rates and the Fed quickly reversed. And we've seen it with COVID and them leaving the stimulus in. So I'm doubtful that they'll ever get to the point of raising rates significantly.
Yeah, definitely. That's something that I've heard echoed among the people that I speak to. Tapering, okay, might happen. Rate hikes, we'll see how that goes.
Yeah.
I think since the last time we spoke, we've had Jerome Powell have his reappointment as Fed chair. Maybe you can give your thoughts on that and what that means for us going forward.
So that's a really interesting thing. And I haven't heard it discussed in the media very much, but I was connecting the dots with the reappointment and the kind of the flip of Jerome Powell to being more hawkish than usual. And some people will say, oh, it's because inflation showing itself. But in all fairness, inflation was showing itself prior. And what's interesting is you can connect the dots and say President Biden reappointed Jerome Powell. President Biden is a Democrat. He's looking at the midterm elections in 2022. And there's a ton of people that are being affected by the high inflation rates that are voters for the Democrats, meaning middle income and lower income individuals. So the idea here is if you connect the dots, probably Biden said, hey, listen, I'll reappoint you, but you need to fight inflation more hawkishly because I need to try to win, the 2022 midterms and stay with the House and the power of the Democrats, maybe even the Senate as well. So there's kind of an interesting little political action going on with that. So again, it'd be interesting to see, but you could see almost immediately how Powell, in his testimony to Congress recently, he was much more hawkish than he's ever been. And it came right after that reappointment.
Right. And of course, much of what's going on does relate back to inflation. Do you think that the Fed's going to be able to exert that control that you're saying you probably think that Biden would want to see?
Yeah, so I think you're going to see it more so because we've seen such a dramatic fall in oil and natural gas. So there's been a lot of commodities that have collapsed dramatically from where they were recently, and that will naturally bring in inflation somewhat. But I'm skeptical that you'll ever get back to this 2%, at least not for the next 5 to 10 years, which is the level that the Fed wants. And the reason is because even today we got the JOLTS number out, which showed, I think, 11 million job openings in the US. Last month it was, I think, or the estimate was 10.6 million. So there are so many job openings, it's going to force wages higher. Employers are going to have to lure in people to work. That higher wage is the most inflationary thing out there because, again, if you're paying someone $10 an hour and now you have to pay them 15 or 20, think about how much of an impact that is on your bottom line of profits. So eventually over time, that's going to get passed through the goods and services that get sold. And that is going to be very, very inflationary. So I think in the short term, going into the midterms, the numbers for inflation are going to come down just because of the oil drop, natural gas drop, and other commodities. Uranium's pulled back and a few of these other ones. But I don't think it's going to ever really go back in the near term to that 2% level that the Fed wants.
Right. And we've been having conversations about inflation probably throughout the whole year at this point. And one of the things we've touched on is, is it coming through to other people in the market? Are people acknowledging it? Are they seeing it? What's your sense there? Is this something that's becoming now more real to a wider audience?
I think it is. I mean, I think you've seen, just through the cryptocurrency craze, people have become very aware of the amount of money being printed by the Federal Reserve and the government debt. And I think that's been a big driver of the cryptocurrency trade. I'm not a huge fan of cryptocurrency at these current levels. I think there's a lot of, weak money in it that needs to be flushed out before it can really regain traction. But I do think, across the board, people are noticing prices. I mean, you go to the grocery store and, I go and buy, some fruits and vegetables and I'm at $50 just like that. And that didn't used to be the way it was. So people are feeling it. And again, it makes people very aware. And I think that's why it's on President Biden's, radar for what he has to attack if he has a chance at winning and keeping the midterms in the Democrats' favor.
Okay, and amid all of these things that are going on this year, we've seen the markets really continue to rise with the S&P going up, the NASDAQ going up. And I think, some people are perfectly happy to see that. In other circles, there's a nervousness about whether that can continue. So looking forward to 2022, what are you seeing there? What are the charts telling you about these increases?
Yeah, so let's take a look at the chart right now on the S&P 500. This is the SPDRs, which is the ETF that tracks it. And what you can see is really this beautiful channel that the markets have been kind of following. And you can see when we get to the high end, we sell off. We come back to the high end, then we sell off to the low end, then we rally back to the high end. And we've really been stuck in this remarkably since really a year and a half ago, coming back to like May of 2020. And, right now that's holding up great. We are starting to see volatility increasing. And I do believe that that's because you have this, potential tapering by the Fed. And remember, anytime you remove that money from the system, the markets are going to throw a little bit of a fit. So I think increased volatility is likely into 2022. And I do think that if the Fed goes through with tapering, there's no way for current valuations in stocks to stay at current levels. The stocks, the economy is decent, but it's not amazing. And again, inflation is going to eat away at profit margins in the short term. And obviously removing that tapering money is going to eat away as well at these valuations. So my guess is eventually this line breaks. And this is what investors out there, if you're watching this is what you should care about and only care about, this lower trend line. As long as you stay on it or above it, you're really good. You can just go and say, okay, this market's in an uptrend, it's staying in this range. If this breaks to the downside, that's where you need to become concerned. That's where, in my opinion, you actually could see a 10, 20% dip in the stock market, which would really shock investors in the near term here.
Right. And so conversely, if we see the Fed falter on the tapering schedule, or there's another kind of black swan event where money needs to come into the market, do we then see the markets continue to rise?
That's such an interesting question because, I think a little bit, if they kind of back off a little bit, I think that would be a good thing for the markets, at least, not necessarily for all of us out there that have dollars and that are getting diminished by inflation. But what I'm really concerned about here is the Fed is somewhat in a box. And I think that's why when the Omicron variant emerged, the markets kind of freaked out, because if you go back to 2020 of March, when COVID reemerged or came out initially, the markets initially panicked, and then the Fed came in with bazookas of absolute amounts of cash. And they could just print as much as they needed to because inflation was 2% or less. The government, same thing, printing money, sending checks out to Americans, multiple times. The problem is now with inflation at 8%, the Fed is handcuffed. They can't print the same amount of money. The government can't do the same kind of metrics. And that puts things in quite a bind where there's a box around the Fed now of how much stimulus they can supply without making inflation go to 10%, 20% or higher, and creating a real issue for the middle and lower income, citizens of the United States and really around the globe. I mean, all central banks are doing this type of thing. So that's my big concern is the Fed almost seems like they're out of bullets to really attack things in the short term. And I'm wondering how they manage that on both sides.
Okay, yeah, definitely. That will be important to watch for. And all these things that we're going through with the Fed, that's important to keep an eye on. But I did want to ask, are there any other data points that you're watching that are important for investors to keep an eye on when they think about what's happening in the market right now?
Yeah, so I think you have to continue to watch all the inflationary data. That's going to be a big guide, for what the Fed does. I'm sure the Fed is watching jobs numbers, data on the inflation side, all of that kind of stuff, CPI numbers, PPI numbers. So those are the ones I'm focusing in on. And then I'm really just watching the charts, watching the 10-year yield and keeping a close eye on it. And what I'm really watching here is we've seen a couple big drops in the market, and you can see a chain reaction in the cryptocurrency markets and even in the oil markets, in the natural gas markets, and it's a deleveraging event. And that's really my big concern, is that as the Fed pulls back on the stimulus, do we see a reduction in margin and money that's been borrowed to invest, which has been at all-time highs? And if that starts to happen, it could be a domino effect throughout all markets, including cryptocurrency, and really cause a steep decline. So, there's a lot of things to watch here, but again, it's at what point is it the straw that broke the camel's back, essentially?
Right, and of course, that's so difficult to predict from where we are right now. I want to keep going and talk about some more specific topics now that we have an idea of what's happening in the market. And of course, first on the list is going to be gold. I wondered if we could take a look at the chart for gold right now, and maybe you can remind us about your prediction for 2022. Where do you think the price is going to be going next year?
Yeah. So one of the things I continue to like about gold is that it's not doing anything. Now, a lot of people have pointed out that, oh, gold's not doing anything. It's done. No one wants to own it. Everyone wants cryptocurrency. I look at this chart on gold and I just love the consolidation. So, again, you've had this massive move up in gold starting in 2018, all the way up to the highs in late 2020. What gold has done since is really just go sideways to slightly lower. That's known in the technical analysis world as bullish consolidation. All right. And basically use the analogy of a marathon runner, right? So here was a marathon and gold was running that marathon all the way up. And then it got to the end and it can't run another marathon right away. I mean, it's too much energy needed. So what it needs to do is just take a rest, refuel, consolidate here. And then once it breaks out, and I'm watching this trend line right here, notice this pivot high to this pivot high. And recently we attacked this pivot high and then pulled back. If this line gives way, which I do expect it to, you should see a move up very quickly to this 2020 high, which is around $2,065. And then eventually higher. I think, again, by the end of 2022, you could even see as high as $3,000 an ounce. So again, with the chart, even though it hasn't done anything, that's almost ideal as a technician because it's just refueling. It's not pulling back so much to cause concern. It's just really pausing here. And that's a good thing, believe it or not, for the chart.
Yeah, that's very reassuring and looking forward to 2022. I know a lot of people are going to be excited about that potential for 3,000. But let's also maybe take a look at what the downside could be for gold next year. How low could it go? Just so we're prepared. I know there was some disappointment this year.
Yeah, for sure. So one of the things I follow here on the gold chart, and then that's really smart to do. You always want to know your downside potential. And here, I just want to show this. So this is kind of a parallel line here that's drawn with this line. Notice this one's being parallel. So your downside risk is probably in the low 1600s here. All right. So that would be kind of a little bit of an L level that I'd be monitoring. And as long as, you could come down there, and that's still, in all fairness, that's about $175 of downside. So there is some downside risk. Again, the fact that gold has held up so well gives me optimism that it won't ever get down there. But in a bearish case scenario, let's just say, all of a sudden inflation isn't such a big boogeyman, and we can see it coming down significantly, that would be your downside level. But I always go back to the fact that, like we talked about just a little while ago, the Fed is somewhat in a box, right? Interest rates can't go too high because of the US debt. So they're going to have to keep them under wraps. The next black swan event comes along, whether it's a bear market or a recession or something like that, they're going to have to come out with some sort of stimulus. So there's, in the longer term, if you're looking 3-5 years out, it's inevitable they're going to have to print more money. And there's been so much money printed that at some point gold has to react to the positive side. So whether it's in the short term that it dips a little bit more, I'm still looking at it for myself as an investor as just buying the dips. I just slowly accumulate, keeping it at about a 10% position in my portfolio.
Perfect. Okay, I think that's a good reminder of your thoughts on gold. Of course, we have to take it over to silver right now. I remember earlier this year, you were feeling a little bit lukewarm. Last time we spoke, maybe feeling a little bit more positive. So silver in 2022, what are your thoughts? Maybe we can go for that kind of upside downside look at the metal.
Yeah, so here's your little wedge pattern on silver, this chart of silver. You can see it's been holding here, it hit here, then it came in, kind of kissed that line there, again here it pierced, and now we're right back to that same kind of level of support. So as long as this level holds, which is around $22, silver's in decent shape short term, and then you want to watch to see if it goes and attacks this trend line here. Notice the high pivot here, and then it kissed it right here as well. And that's around $28 or just sub 28, maybe $27.80. So right now you've been trading in this range for a long time. As long as it holds this line, you're in good shape for a longer term breakout. If by chance you break below this line, there is some downside, and you could see it right here, right? So there's a big kind of level right here around $18.75 to $19. And that to me would be your major support right there. So again, if this line breaks, you have a little bit of a hop, skip, and a jump down to about 19 bucks. But I honestly am still in the camp that use it as buying opportunities. Again, silver, because it's an industrial metal, can be a little bit more volatile if the economy slows down or if the world economy slows down. But longer term, that printing of money should have a net positive effect on silver, even if it dips in the short term.
Yeah, definitely a great point. And just for silver, I want to touch on one more thing. We always hear about that level around $30. If silver can get through it, then it can potentially rocket higher. Mm-hmm. Do you think that's something we see in 2022? What are your thoughts there?
I actually do think so. I mean, again, it kind of goes along with my projections for gold. So it'd be somewhat unusual to see gold go to close to 3,000 an ounce and then not see silver at least break $30. And again, I liken it back. If you go back on the weekly chart of silver and you go back to 2008, 2009, and so forth, let me show that chart. You had this kind of rocket ship effect. And I just want to show what happened here is that, let me get my trend channel out here. So what you can see right here, right? Going back to, again, this is 2008. Notice how it kept on, it kind of bubbled down, hammered, came down, hammered, and then look at when it broke out, the rocket ship it had. It went basically from, I don't know, what was that, 19 bucks, 20 bucks, all the way up to almost $50. And that's kind of what I'm expecting over here. You're hammering. And again, if you hammer, at some point you break out, and you could have that same rocket type effect all the way to $50 on silver. Now, again, I don't know if that happens in 2022, but the point is you look for the breakout. When the breakout occurs, that's when you should get a supercharged move up on silver. How high it goes, I'm not 100% sure, but again, it should be a very successful trade to the upside.
Okay, perfect. Thank you for that explanation. I want to take us over now to Bitcoin. I don't think we've had a chance to speak about it the last couple of times we talked, but I know we have people who are clamoring for your thoughts. People always talk about silver as a volatile market. Certainly Bitcoin gets that title as well. So 2022, what can we expect there?
So I'm in the camp that Bitcoin has put in a double top, a failed breakout, and it's in the 4-year cycle. So again, just thinking about the cycles on Bitcoin, it basically started in 2009. 2013, you had the first big mega spike, which was to about $1,200, $1,300. It then 4 years later went to 20,000. 4 years later from then, by the way, that was 2017. Now we're 4 years later in 2021. So it's literally 4 years. Every 4 years, it seems to have this blow off mega surge to the upside. If you look at this chart, this is the chart this year. Here was your April high. It briefly got above in October and failed. And then it tried again and even making a higher high. And again, it failed. And it failed, honestly, because, I mean, there was so much retail bullishness there. It only failed because you had bigger money selling into that. And since then, we've seen a pretty significant dip. So I think honestly, you're going to see a little bit more upside. I'm looking for 53 to 54,000. And then I would get more bearish again for another down move to 40,000. A bounce there, then 30,000. And I even think potential for 20,000 is in the cards, or sub 20,000. So, longer term, again, if you're someone who's like, hey, listen, I'm going to hold Bitcoin for 20 years, I think you're going to see 500,000. Absolutely. Even less than that, maybe in less than 10 years, you'll see 500,000. But I do think that there's a problem with leverage in this market, which is, by the way, Fed caused. The Federal Reserve has caused this inflationary money flowing into the system. Everyone's willing to maximize the margin that they're using because interest rates are so close to zero. It's almost like free money. Eventually that has to unwind. And we've seen already such a dramatic drop. I mean, think about this. The stock market pulled back on the NASDAQ 100, 7%, 8% before it's rallied the last few days. And that move down on Bitcoin was from 68,000 to 42,000. So if you just think about that type of X move on Bitcoin versus the stock market when deleveraging occurs, if the stock market corrects 20 or 30%, you could easily be at $20,000 on Bitcoin. So I will be a huge buyer for the long term when it gets down in that 20,000 range, but I'm in the camp that it has to deleverage before it starts grinding back up.
Right. And of course, one of my questions for you is going to be, at what point would an investor want to enter Bitcoin if they're not in there already, or they want to add to their position? But clearly, it sounds like it depends on what exactly you're trying to accomplish.
Yeah. And again, keep in mind, listen, there's always a chance it doesn't get to 20,000 or sub 20,000. So, I mean, if you're someone who wants to put $100 or $1,000 every month into Bitcoin, then your dollar cost averaging and the math will work out for you no matter what. I'm just not the type of person that's going to say, okay, at these levels, I'm going to put a ton of money in, expecting it to shoot up right here. Again, there's too much fluff in the markets at this point. And the risk reward just doesn't make sense for me. I see so many other opportunities. Natural gas looks good down here after the big fall. And there's other stocks out there that are better investments in the short term than a longer term trade on Bitcoin.
Okay, great. Now, as we're wrapping up, I want to take a moment to look back at 2021. When you're looking back at the year, I know it's been such an interesting time. What are some of your main takeaways or surprises that we may have seen during the period?
Yeah, I mean, I think the surprises and looking back at the year, at least for me in terms of trading, is the momentum and the amazing thirst from retail investors. I think that's the story of 2021. There were so many times throughout this year where I was so sure that the markets were done going up and that they would pull back and then it would be a longer term top. And we kept on seeing the buy the dip mentality. I think I said, in previous interviews that in the last year, you've had more money come into the market from the retail investor than in the last, I think, 20 years combined. That's an incredible number. It makes me a little nervous because that happened in 2007 as well, kind of that same type of retail investor entering the market. And we know what happened in 2008, 2009. But still, I think that's still the story, is that so many new investors because of COVID have come into the investing world, which in the long term is good, getting people in their feet wet in investing, seeing how it works, hopefully learning from any mistakes they make. And long term, that's great for the markets.
Right. And that leads perfectly into my next question, which is, heading into 2022, what is your best advice for investors?
Oh boy. So I think you need, with the Fed saying that they're going to taper, I think you need to be a little bit more cautious on the markets. Again, it's hard to say that when the markets do nothing but pull back and then go to new all-time highs. But again, be careful because the Fed has now given you the, hey, we are actually removing money from the system at this point. Instead of pumping 120 billion, they're reducing it, I think, by 15 billion a month. Over the course of the next year, that is going to be $1.5 trillion taken out of the system on a monthly or on a yearly basis. There has to be some impact to the market because of that. So that's the big change going into 2022. You do need to be aware of that. Doesn't mean we can't make new all-time highs, but I'm certainly more looking for pullbacks and steeper pullbacks and more volatility because of it versus 2021.
Okay, well, that is all from me for today. Do you have anything else that you wanted to add? Any final thoughts? And maybe you could also let us know where to find you if we want to learn more.
Sure. So follow me on Twitter at Gareth Soloway, best place to find me. In addition, I recently launched a crypto trading website, which is Swing Trades on Crypto, verifiedinvestingcrypto.com. It's a very cool place. I do daily videos with lots of education and put out all my crypto trades there. And then obviously inthemoneystocks.com for swing trading stocks. And, just always a pleasure to talk to you, Charlotte.
Oh, great. And I'm sure we'll have you back to kick off 2022. Yeah, that's all from me. Thank you so much for being here.
Thank you. Have great holidays.
Great. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Gareth Soloway with inthemoneystocks.com.